We've turned the corner on the new year, and this is probably the lowest inventory week for all of 2023. During the pandemic, inventory kept falling during January, February, and even March as demand dramatically exceeded the new supply at that time. This year, we're getting back to more normal behavior. New listings starting to hit the market after the first of the year. Some listings that were withdrawn over the holidays are back, many with lower prices. And since demand is significantly lower than the last few years, the last few Januaries, we should start to see inventory rising starting next week and definitely rising later in the month. The real signal for the spring market and therefore the whole year comes between the second and third week of January. So stay tuned for the next few weeks, and we'll watch whether buyers are just looking or are ready to actually take action buying homes. Every week, of course, Altos Research tracks every home for sale in the country. We analyze the pricing, the supply and demand, and all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers, right now might be the right time to step up. And go to altosresearch.com, book a free consult with our team, because everybody's worried about what's happening in the market right now. They need you to help them see clearly. Just a reminder, the data we cover here in these national videos is available for every zip code in the U.S. So there's a link in the description below to click and join us to dive in. I'm Mike Simonsen. I am the CEO, founder of Altos Research, and here's what the data looks like for the first week of 2023. Happy New Year. The median price of single-family homes on the market across the country fell by just over 1% this week to $405,000. I expect prices will rebound with the new inventory in the next couple of weeks. This price rebound happens every year. And because affordability is still dramatically reduced with mortgage rates well over 6% right now, the thing I'm watching for is how big or small that price bounce is this month. It'd be very bearish if home prices kept falling weekly like they have since May. So as you can see, illustrated by the dark red line here, the prices have been ticking down since May. As of right now, the signals look like we'll have a small seasonal price increase in the next couple of weeks. And that's what we should be watching for. You can see in the light red line here, the median price of the newly listed homes each week took its annual Christmas, New Year's week dip, and then will rebound in next week's data. This is a little impacted by the fact that the New Year's fell over the weekend. So we'll get some new listings this week and then maybe more in next week's data. So we might have 2 weeks of the January rebound to pay attention to. Buyers have significantly more selection than they've had in the last several Januaries. Though we ended 2022 with fewer than 500,000 single-family homes on the market, back in June, inventory was climbing so quickly that it looked like we might have significantly higher inventory to start the year. There are indeed 67% more homes on the market right now than in January of 2022. Last year buyers were grabbing everything they could while money was still ultra cheap. At 490,000 single-family homes, though, it's still 39% fewer than the start of 2020 before the pandemic. So at that time, there were 782,000 single-family homes on the market. That was already low, and now we're at 490,000. I've actually talked about this in our monthly webinars, which is that some of the country, namely the Midwest and Northeast, is still at very low inventory, pandemic lows. while the big boom markets like Phoenix and Austin now have more inventory than they did before the start of the pandemic, pre-pandemic. So this spring is playing out to be very different depending on your local market. Meanwhile, there are only 251,000 single-family homes in the contract pending stage right now. That's 35% fewer than last year at this time. The pendings announcements from NAR are going to continue to be shockingly low for the next few months. That means the sales volume will be very low also. These homes are in contract now. These are transactions that will complete in January, February, even March, and then visible in March and April. So all of those headline numbers are going to be very low in terms of transaction volume. The pendings data will take a few weeks longer than the active market to rebound for January, but that'll start climbing later in the month. So only 30,000 new pendings this week, which is low as you'd expect of the holidays, and it's still a third lower than last year at this time, where there was 45,000 over the holiday week last year. The light red portion of each bar here is the new pendings each week. The total bar is the total count of the homes in contract in the given week. And you can see how low we are at the right end of the chart compared to last year. The middle of the dip in the middle of the chart is New Year's week last year. Price reductions also fell quickly over the holidays, down to 38.5% of the homes on the market have had a price cut in the last few months. In this chart, every line is a year. You can see we've started 2023 on the left end of the chart over here. The market is a lot slower, of course, than it has been in recent years, but it's been so hot in recent years. And so very few price reductions have had to happen. So price reductions now will continue to decline as fresh inventory hits the market in the next couple of months. If price reductions nationally get under, say, 35% in the next couple of months, that'd be a pretty normal range and a signal that buyers are finding some ability to buy. Price reductions have been very local too. So we will want to watch the hardest hit markets, which have been at over 60% of homes with price cuts in the cities like Phoenix and Austin. And so we're going to watch to see if those come down too. And, many of these markets have been the epicenter of investor buying during the cheap money era. And so those investors had stopped abruptly last year. So we're going to watch for signs of buying resuming in the next few weeks. At 6.5% mortgage rates, it seems like that's not super likely, and more likely that those buyers are going to hold off while rates are at the 6.5% where they are right now. I also wanted to share today some rental data. Rents have been ticking down with home prices since the summer peak. The median rent for single-family homes across the U.S. is $2,175 right now. That's up from last year when rents were still jumping quickly at this point. With current economy fears, fewer people are forming new households, so demand is lower on rental units as well as for purchases. They move in tandem, not opposite each other. So hopefully the inflation numbers will catch up to reality, and as the housing inflation portion of the CPI starts to subside, and policymakers can adjust accordingly. There's so much to see in the local data right now. If you need to understand your local market, go to altosresearch.com, book a free consult with our team, and learn how to interpret the crazy data for your people who need it most right now. They need you to be the expert. So this is my favorite time of year to watch the leading indicators in the real estate data. And so stay tuned in January because it's going to be really fascinating to see how 2023 is going to play out. All right, looking forward to working with you.